Hello, in today's video we're going to be looking at the Friday 6/27/25 SPX index session, and we're going to be looking at 0DTE option trades utilizing the day trading GPS S&P 500 SPX index daily key levels indicator. If you'd like more information regarding this indicator and how it can help you in your SPX option trades, you can look for the link in the description under the video to learn more and purchase the indicator. If you send us an email at daytradinggps@gmail.com, we can send you a promo code that will give you a substantial discount either on the monthly access subscription or the one payment for lifetime access plan on this indicator. Okay, so what we have here is a chart of the SPX CBOE main index, and this is a 2-minute chart for the Friday, June 27, 2025 SPX index session. We're also going to be looking later at the thinkorswim charts for both the call option used here and the put option used here. Okay, so first off, on all of our daily key levels indicators, of which there are 5. So we have one for the SPX index, we have also one for the NASDAQ NDX index, and we have another one that's for stocks and ETFs, and then we have one for Forex currency pairs and cryptocurrencies, and then one for futures such as NASDAQ, ES, gold, and crude oil futures, as well as about 30 other major futures contracts, and also for Forex CFDs on indexes as well. So that is the futures CFDs daily key levels indicator. Then we have the Forex crypto daily key levels indicator, the stocks ETFs daily key levels indicator, the SPX one, which we're looking at in this video, and also the NASDAQ NDX one. So on all the daily key levels indicators, the daily bull bear key price level, the bull bear KPL, is the main daily key bull bear pivot for that session. Long on price crossing above or candle close above the bull bear KPL, short on price crossing below or candle close below the bull bear KPL. The primary goal of the R levels above and the S levels below the daily bull bear key price level, so these are the R levels above and the S levels below, is to initially identify optimal stop loss and take profit levels from entries taken at or near the bull bear key price level. The predefined levels are specifically designed to secure gains. When these levels, the R and S levels, are hit, either the main levels or the midpoint levels. So here we have the midpoint levels turned on, and then these in the larger typeface are the main levels. Okay, so again, while when these levels, the R and S levels, are hit, either the main levels or midpoint levels, consider taking profits either fully closing out all of your contracts or partially closing out the majority of them, but moving your stop if only partially closing out to reduce or eliminate further risk on your remaining runners, ensuring you benefit from the market's movement. And by closing out the majority of your contracts and leaving runners, you can also secure that you will have a profit from that trade as well. So generally, if you're going to do that, as opposed to closing out 100% of your contracts, you would generally want to close out somewhere between 60 to 90% of your contracts, just really depending on what you start at, whether you're starting at 3 contracts, 5 contracts, 10 contracts, or 20 contracts. In today's video, we're just going to be looking at trading 1 contract. While the R and S levels above and below the daily session bull bear key price level are primarily designed as profit-taking levels from entry taken on price crossing above or candle closing above the bull bear key price level, or conversely price crossing below or candle close below the bull bear key price level. These R and S levels can also serve as excellent trade entry points as well, depending on and taking into consideration the overall context of the price action and price reactions occurring at those R or S levels throughout the session. The daily R levels and S levels often act as significant support or resistance levels, triggering reversals, and can be opportunities for potential optimal entries to go long or short, with initial target profit taking from those entries occurring minimally at the next one level move above for longs or minimally the next one level move below for shorts. So for example, on something like that, if you were entering long at or near the S2 level, then you'd be looking for minimally a profit taking of the next level above, being the S1 level. Conversely, if you're taking a short here at the R2 level, then you would be looking at profit taking minimally at the next level below, which is the R1 level. The levels also provide a gauge for where to optimally place your stop loss on entries, either a tight stop loss or a standard stop loss, as demonstrated here in the screenshot, which will be showing you here for the call option as well as the put option. So the daily levels, the bull bear key price level, and the R and S levels provide entry exit points as well as stop losses for level to level management of your trades. And that applies to all the different daily key, 5 different daily key levels indicators, regardless of what symbol types they are used for. But today we're going to be looking at the S&P 500 SPX Index Daily Key Levels indicator. Okay, so first off, this indicator works on 2 different symbols for XPX. One is the XPX symbol on the CBOE exchange, and that is the main XPX index that opens up every trading day that the market is open at 9:30 a.m. Eastern New York time. As you can see here, we have that 9:30 open marked off here. The other symbol that the indicator works on is the SPX 500 8-cap CFD, which I will show you briefly. So when you have it on the other symbol, the SPX 500 8-cap CFD, using a 2-chart system, one on the SPX 500 8-cap CFD, and then having a separate chart for the SPX CBOE index. So the advantage of having the 2 charts open is that if you have your chart set to the SPX 500 8-cap, then at 9 a.m. in the morning, 30 minutes before the main CBOE SPX index opens at 9:30, you will get the levels at 9 a.m. 30 minutes before that open via this second table here that's displayed when it's on the SPX 500 chart. So this chart here has this particular table here for the SPX 500 CFD, and then it has a second table which displays the adjusted values for the CBOE SPX index, which will open 30 minutes later at 9:30. So here's 9 a.m. here. This is where you would have received the levels here. These levels over here on the chart are for the SPX 500 CFD. So the way you're getting the CBOE SPX index here 30 minutes early, the levels for that is on this secondary chart here, just secondary table on the chart here. Then at 9:30 on the SPX CBOE index, the levels for that symbol will display on the chart with the first tick at 9:30. That is the way PineScript works, even though the indicator knows at 9 a.m. what the levels are. If you have it on the SPX CBOE index symbol on the chart, it will not display them until the 9:30 open when the first tick occurs, because that is the way that PineScript works. So the only way of getting the levels early is to have it on a second chart on the SPX 500 8 cap. So you can also get these at 9 a.m. here via the second table. And these, as you can see, 60 foot and 59.80, those are going to be the same levels that show up at 9:30 on this chart. Okay, so moving on here, this is where the open was. A few candles later, we're getting a move. This is kind of an explosive move on the open here. So we're waiting to see what happens once it reaches the bull bear key price level, what kind of price reaction we're going to get. And in today's session, we got a positive reaction as far as long play, where its price closed above the bull bear key price level. So you had a window of opportunity here starting at 9:38 a.m. through 9:46 a.m. to enter long here into the call option at a strike closest to the 61.5980 bull bear key price level for the session. So that would be the 61.60 call option. Then for a stop loss, the standard stop loss would be the midpoint level below the bull bear KPL. So that would be this level here, this mid BBKPL S1, 61.5258. If you're more inclined to use a tighter stop loss, then you would use a quarter level below the bull bear KPL, which is 61.5619. And this indicator does not automatically show that level. However, it's very easy for you to get the tight stop loss by simply adding this number here along with the bull bear KPL, totaling it, dividing it by 2, and that's 61.5619. So everyone has a different idea as far as managing risk in a tight stop loss. Again, this would be your standard stop loss, would be the midpoint below this entry here, the first midpoint level below. If you were more inclined to use a tighter stop loss, then that's how you would arrive at the quarter level. Okay, so during this time frame, 9:38 to 9:46 period, the 61.60 0DTE call option ranged in a buy price from $9 to $10.80, so that's $900 to $1,080 per contract. So in this video, we're just going to be looking at profits based on using one contract, which is the minimum, and which we have that wrapped up here at the end, which we'll go over. Okay, so also in this video, we're going to be looking at profits just from one level moves. So generally, you want to look at closing out minimally at a one level move. Your next option, option 2, as far as target number 2, would be a 1.5 level move from the entry, and your final target, if you would like to hold on for maximum profit, would be a 2 level move. So here we're just looking, even though we have all three here, in the end we're just going to be looking at one level moves, so you can see how much profit you can make by using this indicator just from taking one level moves. So from 10:02 a.m. to 10:06 a.m. SPX hits the R1 level, which is 61.7424. So that, remember, the entry was from 9:38 to 9:46. So this is roughly just about 20-25 minutes later. It hits R1, and the 61.60 call ranges in that time period from a low of 1790 to 1990. So that's 1,790 to 1990 per contract. So based on the worst case scenario buy price here, if you paid 1,080 and you sold at the worst case scenario sell price here when it hits R1 of 1790, you have a profit on that one contract of $710 before commissions. So again, we're just looking at one contract, worst case scenarios here. If you had 10 contracts, you can just simply multiply that by 10, so that would have been $7,100. And if you had 5 contracts, it would have been $3,560. If you are more inclined to hold on for 1.5 level move, then 1136 to 1140, SPX hits the mid R1, R2 level here, The 6160 call in that mid R1, R2 level, 6181.46. The 6160 call ranges now from during that time period of 2290 to 2605. So that's $2,290 to $2,605 per contract. So if you were taking the worst case scenario here, 1,080, selling at the worst case scenario here, 2290, then that is roughly $1,200 per contract before commissions. Now on most days, if it's making a move and starting to close above mid R1, R2, 75-80% of the time, it will normally at least touch the R2 level or exceed it. In this case, it came close to touching it but did not. So in this particular session, the high was 6187.68. 6187.68. R2 is 6188.67. So it came up $1 short here. So during this time period of 12:26 to 12:32 p.m., when it's nearing the R2 level, the 6160 call is now 26.32 to 28.22. So that's $2,632 to $2,822 per contract. If you take the worst case scenario here, 1,080, worst case sell price here, 26.32, then it's roughly approximately $1,600 or a little under $1,600 per contract. Looks like about $1,550 or so before commissions. Okay, so you would have closed out either here, here, or here. 100% of the contracts, obviously if you're just trading one, you're closing it out. So you're closing it out either here, here, or here. If you were trading multiple contracts and you were, say, trading 5 contracts, then you would sell 4 of them either here or here and leaving a runner and adjusting your stop. Whenever you're adjusting your stop and leaving a runner after selling somewhere between 60 to 90% of your contracts, which really depends on how many you're starting with. If you started with 10, you could sell in 6, 7, 8, or 9, and that would be 60 to 90%. But obviously, if you're only trading 4 contracts, you'd have to sell. If you only sold 2, that would be 50%. So you'd have to sell 3, which would be 75%. If you had 3 contracts, you'd have to sell 2. That would be roughly 66%. So that range of 60 to 90% just really depends on how many contracts that you are trading. In theory, 3/4 or more would be ideal, so 75 to 90%. But again, that depends on how many you're trading in the first place. Okay, so you're out of this here and you're waiting for the next opportunity. Now, you could have gone short up here. We didn't do this on this particular session. We're just looking at trades taking at the bull bear key price level. So here, starting in this range here, we had some negative news come out in the market for Trump saying that he was going to end all of the trade talks with Canada, and that basically those talks were going to be over with. So the market reacted negatively to that news, and so we have an acceleration of this move here, a little consolidation, but then an acceleration here occurring where it goes below the bull bear key price level between 2:12 and 2:16 p.m. So here we would do the exact opposite of what we did here. Here we're looking for a put opportunity, which would be the 6160 put, as the closest to the bull bear key price level. For stop loss, we're either using a tight stop loss or a standard stop loss level above the bull bear KPL as noted here. So the standard stop loss, as we mentioned earlier, would be the first midpoint level. So in the case of buying puts, it would be the first midpoint level from this bull bear key price level. So you're looking at basically a half level above here from this entry here. So this is the price here, 61,702. If you're more inclined to take a tight stop loss, then you would simply take 61,702, 61,5980, add them together, divided by 2, and that's 61,6341, and that would be your quarter level above. The stop loss is in reverse on this, or just the same thing, just in reverse, below the bull bear key price level. If you were taking entries, let's say you took an entry up here, you would do the same thing up here. So if you want a tight stop loss, you would have a quarter level, which would be this level and this level added together, divided by 2. That would be your tight stop loss. Your standard stop loss would be this midpoint level if you were taking the entry here. And the same thing down here. If you're taking an entry near here, then at the S2 level, then your tight stop loss would be a quarter level below S2, taking this level and this level, adding it, totaling it, dividing it by 2, where your standard stop loss would be the mid S2, S3 below this level here. Okay, so during this time period, it's obviously later in the session, so the options are going to cost much less than they did earlier in the session. So the 6160 0DTE put option ranged from 476 to 767 during this period of 212 to 216. That's $476 to $767 per contract entering during this time period. There are your two stop loss options. Okay, so at 2:30 p.m., so this was 212 to 216. So at 2:30 p.m., roughly 15 to 18 minutes later, SPX hits the S1 level. The 6160 put is now 1430, a range of 1430 to 1940 during that time period, which is $1,430 to $1,940 per contract. So we take the worst case scenario buy here at 767, the worst case scenario sell here at 1430, and when the profit on that one contract is $663. 10 minutes later at 2:40 p.m., SPX hits the mid S1, S2 level. The 6160 put is now $21.55 to $25.96. So that's $2,155 to $2,586 per contract. If you instead chose to exit at the 1.5 level move, then you take the worst case scenario here, 767 and 21.55. So you're basically looking at just under $1,400 for one contract. As you can see here, it did near the S2 level here, not as much as here, but it did come close to it. If you held out later for that, as we'll show on the Thinkorswim charts, then that contract went up as high as about $28 during this put contract during that time period. Okay, so we'll look at those Thinkorswim charts here in just a minute. This note here is for lotto plays. So as we explained on our last video on SPX, that lotto plays are something that you can consider later on in, say, the last hour of the session or the last 30 minutes of the session, depending on what's going on. If you have enough accumulated profits from earlier in the session and you're inclined to try a lotto trade at the end of the session, then you would want to take a max of 10% of your accumulated profits from earlier in the session for a possible lotto play into the last hour or last half hour of the session. So just to note here, from here 2:56 p.m. to 3:22 p.m. you could have done a lotto play of a move back up to the bull bear key price level. So that would have been a 6160 call again, and as we'll see on the Thinkorswim charts, the buy price for the 6160 call range during the time period of 256 to 322 from here to here was 40 cents to $1. So that would be $40 to $100 for one contract. So as we see here, on the two trades we did early in the session with the worst case scenario on one contract, we had a profit before commissions of $710 here, $663 here. So that's $1,373 profit before commissions here. So if we're taking a max of 10%, that would be roughly, we could allocate up to $130. That way, if the trade goes bad, and let's say the trade becomes worthless, this lotto trade that if you're inclined to try that, then you still have roughly $1,200 of profits still intact from out of your $1,373. So as you can see here, during this time period, one contract would have been anywhere from $40 to $100. So you could have bought, either two contracts in the range of 60 cents to 70 cents, or you could have just bought one contract somewhere between $40 and $100. And as you can see here, as we've marked off at 3:50 p.m., we got an explosive move where if you did take the slot of play, the SPX did hit the bull bear KPL here and closed above it. And as you can see, it closed above it, and this is at 3:50 p.m. and into the end of the day, it moves all the way up from 61.59.80 during the last 10 minutes to R1 61.74.24. So at 3:56 to 3:58 p.m. candles here, that play would have also hit R1. Okay, so now we're going to look at the thinkorswim charts. So first, we're going to look at the 6160 call. So we have these times marked off here, which match the points on the other chart we're looking at. So here, if you remember, 938 to 946, entry on break above and close above bull bear key price level. So that happened here during this time frame. These are the two timestamps marked off for that time frame. 10:02 a.m. to 10:06 a.m. SPX hits R1 level, so that would be these here. 11:36 to 11:40 a.m. SPX hits the mid R1 R2 level, so that would be right here. 12:26 to 12:32 p.m. SPX nears the R2 level of 61.8867, hitting a high of 61.8768, so roughly came short of $1. But as you can see here, we had a high of 28.22 on that call option during that time period. Here's the lotto plays. So here's from 2:56 to 3:22 p.m. as we pointed out. As you can see, the low occurred during that time frame of 40 cents, but the range of these candles here that you could have bought is anywhere from 40 cents to $1. So if you were inclined to take this, again, risk a max of 10% of accumulated profits from early in the session. As you can see here, 3:50 p.m., SPX hits the bull bear key price level. So on this candle here, we have $1.75 to almost $6. Then if you held on through the end of the session, 3:56 to 3:58 p.m., we had an explosive move up to R1 during the final few candles. And as you can see, this is 350, 352, 354, 356, 358. So the next candle here after 350, we had a move from say 4 to about 11. The next candle was about 9 to a little bit over 14, and the ending candle here we have 12.88. So the opportunity here for taking that 10% of your accumulated profits, if you bought one contract of $40 to $100, depends on where you would have been inclined to get out. If you got out here at the bull bear key price level at 350, then you're basically looking at anywhere from $175 to almost $600. So could have been up to about a $500 plus profit here. But if you held on to the end of the day, you had an opportunity to get out anywhere from 6, say, to 14, a little bit over 14. So as you can see, you would have had a massive profit taking this lotto play. However, lotto plays, that's why you're only risking a max of 10% of your profits. This very well could have not have happened, and it could have just basically traded sideways the rest of the day, and then this would have ended up being worthless at the end of the day. That's why you're only risking a max of 10% of accumulated profits on any plays that you may be inclined to take like this during the last 30 minutes to 1 hour of the session. So in this case, if that had happened, if this had basically fizzled out, and let's say you had spent 10% of your profits, which were $1,373 based on one contract, then if you risked $135, then you still would have ended up with $1,200 profit for the session. So that's basically what lotto plays are for, taking a very small amount of accumulated profits and seeing if you can magnify that small amount of money into a play end of day. But again, a lot of plays are simply optional because they typically are going to happen during the last 30 minutes to 1 hour of the session, and there is a very high potential that they could definitely just go to zero. And that's generally why you don't want to pay. You want to find a strike where, whether you're playing a call or a put, a strike where you're paying, say, no more than 40 cents to maybe $1.50 at the most. Okay, so next we're going to look at the put, the 6160 put. So as you remember, that was after the Trump news came out, and then we had the 212 to 216 window on the break below and close below the bull bear key price level. So that's this rectangle here of that time period with these two timestamps. Here at 2:30 p.m., roughly 15 minutes later, it hits the S1 level. Then 10 minutes later, it hits the mid S1, S2 level here. So you can see the entry price down here, where it would be at here. So this is the tail of this candle here, up here. And then right here for this one. And then 252 to 256, when it's nearing the S2 level, was right here. And as you can see, towards the end of the day, when we got that explosive move back up from it bottoming out here, these basically became worthless at the end of the day. So that's why the SPX Daily Key Levels indicator provides level-to-level management, and that's why you're taking profits on trades early in the session, starting with 1 level moves minimally, or 1.5 level moves, or for maximum profit, a 2 level move. Because you don't want to be in a situation where you're trying to get 3, 4, 5, 6, 7 level moves and having this sort of thing happen where you had plenty of profits and then all of a sudden all those profits are evaporated at the end of the day. The idea is to take profits on level-to-level management, then look for the next trade setup, and then gauge that depending on how much time is left as to whether you're going to be taking a lotto play or a regular play, and again, just taking level-to-level trade management. So here, when this play was in play from 212 to 216, and also that because we had a news triggered event, then in the context of that, and plus we've gapped up quite a bit the last couple of days, we could have seen a very very significant move down, or very forceful move down, which we get a pretty volatile move down here, even though there were some stair steps. This is still plenty of time at the end of the day to do a regular, and that's why we have 2 stop loss options for you to consider, because if you're more inclined, since this is later in the session especially, that with that in mind, I'll just take a tight stop loss, and that way, if this starts going in the reverse direction, then I'll just have a small loss here. Okay, so I hope you've enjoyed this video. Again, if you're interested in purchasing the SPX Daily Key Levels Indicator, you can email us at daytradinggps@gmail.com, and we will send you a promo code that's good for a significant discount off either the monthly subscription or the one payment for lifetime plan purchase. If you also have any other questions, you can also email us at daytradinggps@gmail.com or leave a comment below. Thank you again for your support and for watching this video. Thank you.